Good morning, members. I'm Anthony Rodwell Ball, and I have the honour and privilege to be the CEO of NGS Super. We're trying something experimental, and instead of me writing a board report and posting it on the internet in a written form, we decided to engage a little more personally and a little more directly by filming the board outcomes. The overview that I'm about to provide doesn't take your personal circumstances into account. So any general observations that I may make about markets and economic trends should not be relied upon in determining your own financial situation. We encourage you to seek appropriate personal advice. Please ring 1300 133 177 for more information. So, what's been going on, and how has the board decided to manage in this rather turbulent situation? As we all know, there's been a lot of uncertainty coming out of Europe. There's been a political impasse in the United States as they have struggled in the various houses of Parliament to increase their debt ceiling. And this has had an impact not only on the downgrading of US credit and a flow-on to the United States markets, but general concern across all economies globally. But there's fundamentally a very different situation in 2011 to that which we faced in 2007. And there are some very surprising differences. Corporate balance sheets, firstly, are strong. United States companies are sitting on $1.3 trillion of reserves, a huge reserve of cash which they can invest in time to grow their economy and to leverage shareholder value. Likewise, Australian companies have very strong balance sheets with far less dependency on debt than they had 3 years ago. Household savings also, while having a massive impact on the retail part of our economy, both here in Australia and overseas, the whole household saving mentality has changed, and we've become a nation of net savers. This is in itself a very good thing, although David Jones and Meyer at this point in time may not necessarily agree with that perspective. So as a result, company share prices are quite low relative to the profits that companies are making, indicating that there's general undervaluation in the market and providing attractive buying opportunities in growth assets at the moment. What about Australia and the context of the Australian economy? And there's been a lot of debate as to whether or not we've got a two-speed economy or not. I think there's no doubt that certainly the resource sector is booming, while the manufacturing, consumer and eastern seaboard cities other than Queensland are going through perhaps a harder time than anyone would have anticipated. But we are very well placed indeed to respond to Asian demand for resources and services. There's no indication at all at this point in time that that demand is diminishing. China's economy in particular continues to confound the doomsayers. It's repositioning itself away from an export and infrastructure investment focus towards a greater focus on consumerism. So last week's board meetings were dominated, as you would expect, by the volatility in recent markets. In the context also of the fact that at the end of last year we declared 10.47% in the diversified option. We were number 5 in the Super Ratings 50 ratings. We did very well. But the challenge of that is that you can't bank last year's returns tomorrow. You've got to be continually looking at what's happening in the market and responding, and never ever be complacent. So what's been going on in investment markets, and how has the NGS board and investment committee responded to the recent volatility that we've seen over the last couple of months? The NGS board's view remains that of a medium to long-term investor. We focused on trying to get the best medium to long-term returns and to maintain strong positions in good quality assets that will get us those returns. As you know, 85% of members are invested in the diversified option. And for the diversified option, this strategy means, firstly, that we favour Australian shares over those in the big, old economies of the West, where, as we all know, the greatest challenges currently lie. So we have a home bias in Australia. That's based on the assessment that the Australian share market is undervalued, as I said before, and has a long way to go to recover to its 2007 levels. We maintain a bias also towards emerging markets in our international portfolio, particularly towards China. We're beginning to turn our attention to opportunities in India. We continue to take judicious risk and to continue to look for undervalued and underappreciated assets that we can buy cheaply for the benefit of members. We also maintain good positions in infrastructure and property, as well as in continuing to invest in good quality term deposits and the like to help diversify and manage risk in the portfolio. So that in summary is the situation with investment markets and our portfolio management. I'll briefly now turn to other board business I considered last week. The board reviewed the draft financial statements for the year ending June 2011 and made some comments, and we'll proceed to finalise them by September. Reviewed progress also against the last year's balanced scorecard and business plan, and I'm glad to say that they noted that most of our business objectives had either been met or exceeded last year. The board also considers quarterly reports on compliance and risk. We are a fairly heavily regulated entity, as I'm sure you're aware, and so compliance and risk monitoring and reporting is essential to board business. The board is also undertaking in the second half of this year a governance review and received a presentation from a governance expert on how that should be facilitated. As usual, reviewed the current status of a number of marketing and communications initiatives with a view to better communicating and adding value to our members. And finally, reviewed and adopted the recommendations from the Insurance and Claims Committee. The Investment Committee will meet again before the board. It meets in early September, this time in Adelaide, and the board meets again on the 10th and the 11th of October, and after that meeting I'll provide another update.